Welcome to the deep dive. Today we're plunging into something pretty seismic, shaking up the financial world. It's really sparking a lot of talk about, you know, market integrity, high-frequency trading.
It really is.
The Securities and Exchange Board of India, SEBI, they just dropped an interim order, this was July 2025, against a huge name in quant trading, the U.S. firm Jane Street.
A major player.
Exactly. And the accusation, and SEBI is alleging Jane Street cooked up what they're actually calling a sinister scheme to manipulate India's Bank Nifty and Nifty 50 indices. Okay, let's unpack this.
Yeah, there's a lot there.
So for anyone maybe not familiar, Jane Street founded back in 2000, based in New York. They're a proprietary trading firm. They specialize in quantitative high-frequency stuff across global markets.
Right. The cutting edge, really.
And just to give you a sense of scale, in 2024, they apparently pulled in over $20 billion in trading revenue. Huge numbers.
Wow. Yeah.
They kicked off operations in India, December 2020, set up 4 entities, 2 in India, 1 Hong Kong, 1 Singapore, all registered with SEBI, importantly.
Okay.
So our mission today is really to dig into these allegations, the strategy SEBI thinks they use, the kind of money involved, what the regulators have done, and I guess what it all means for the markets and, well, for you listening.
And it's incredibly significant, this case, because it goes right to the core of market integrity.
How so?
Well, think about it. Trust is just fundamental, right, in financial markets. When a firm this big is accused of systematic manipulation, it's not just about the money they might have made. It erodes that trust for everyone, especially, retail investors.
Yeah.
It makes you ask, is the playing field level? Or are these complex algorithms playing a totally different game we can't even see?
Right.
It really highlights the complexity of modern trading, these quant strategies, and the massive challenge regulators face just keeping up.
Okay, so here's where it gets, really interesting.
Yeah.
SEBI put out this 105-page order dated July 3rd, 2025. And it details pretty meticulously how Jane Street allegedly ran these intraday pump-and-dump trades.
Okay, so break that down. What does that look like in practice?
So imagine this. Morning time, SEBI calls it patch eye. Jane Street is accused of buying just massive amounts of Bank Nifty stocks and futures. We're talking big names like HDFC, ICICI, Axis.
Not few eights.
Exactly. The report says they were moving up to 4,370 crore in just one session. The apparent goal: artificially pump up the index value.
And this is where that quant edge comes in, presumably. It's not just buying, it's the speed, the algorithms finding liquidity.
Precisely.
And then using derivatives, like options, to really magnify any moves they manage to create in the index itself. It's designed for speed and leverage.
That's exactly it. So then, as the Bank Nifty index reportedly jumped, and we're talking maybe 800 to 1,000 points in just an hour or two.
Wow, that's a significant move.
Yeah. SEBI claims Jane Street then jumped into the options market, and they built up large short positions in Bank Nifty index options.
Okay, betting on a fall.
Right. And then the final alleged step happens in the afternoon. They sell off all those stocks and futures they bought in the morning.
Causing the index to drop.
Causing the index to plunge, exactly.
Yeah.
Which, of course, makes those short option positions they built up suddenly very, very profitable. They benefit from the collapse they, allegedly engineered.
And what's really striking, what SEBI seems to be focusing on, is the pattern they say they found.
Ah, so not just a one-off.
No, exactly. They claim they saw this sequence, the aggressive morning buying, the evening sell-off, repeated across 18 different expiry sessions.
18.
Yeah, 15 for Bank Nifty, 3 for Nifty 50. And, expiry sessions are those crucial days when derivatives settle. So big positions can really move the needle then.
Right.
This kind of repeated systematic behavior across so many sessions.
Well, it strongly suggests intent, doesn't it? Makes it harder to argue it was just, normal market activity.
Yeah, I can see how that consistency would definitely be a red flag for regulators. Okay, let's talk money, because the numbers are just huge.
SEBI estimates the illegal gains, allegedly, are around 4,843 to 4,844 crore. That's roughly what, US $570 million.
$500 million, yeah.
And those funds have already been frozen, we should add.
Right. That's standard procedure in these interim orders. Freeze first, ask questions later, essentially.
When you hear a number like $570 million in alleged illegal gains,
Yeah.
does that surprise you?
Yeah.
Or is it just the scale of modern markets?
Well, it's enormous, obviously, but perhaps not entirely surprising given Jane Street's overall scale and the liquidity in Indian index derivatives.
Okay.
It might reflect, both how sophisticated the alleged manipulation was and perhaps how much better regulators are getting at detecting these things. They have better tools now, more data.
Like a better magnifying glass on the market's finer details.
Exactly, spotting patterns that maybe would have been missed before.
And the regulatory action itself was incredibly fast.
Yeah.
The order comes out July 3rd. July 4th, SEBI bars all 4 Jane Street entities from trading in India. PAL.
Swift action, yeah. They're clearly taking this very seriously.
And the next steps are laid out. The frozen money goes into escrow. Jane Street gets 21 days to respond. And they can appeal, of course, to the Securities Appellate Tribunal, the SAT.
And that SAT appeal will be absolutely crucial. That's where the legal battle really happens.
It's also interesting that the probe is apparently widening, not just Bank Nifty and Nifty 50.
That's right. Reports suggest they're now looking at other indices, FINIFTY, mid-cap, and even other expiry days beyond those initial 18.
So they're casting a wider net.
Definitely. It shows they're being thorough, trying to understand the full scope of the activity. You need a really solid case when you go up against a firm like Jane Street, given their resources.
And Jane Street's position.
Well, they're firmly denying any wrongdoing. They've put out statements saying they followed all the rules, all regulations, and they plan to, quote, engage further with SEBI.
Which likely means fighting it through the appeal process.
Almost certainly, yes. The ultimate outcome really hangs on that SAT adjudication.
Given how complex high-frequency trading is, I mean, how fine is the line between a really aggressive, but maybe legitimate strategy and outright manipulation? How does SEBI actually prove intent here?
That's the perennial challenge, isn't it? Proving mens rea, the guilty mind. It's the highest bar.
Right.
They'll need more than just the trade data. They'll be looking for patterns, yes, but also maybe communications, internal documents, something that shows the primary purpose wasn't providing liquidity or normal trading, but was specifically to move the price to benefit those option positions.
The proverbial smoking gun.
Exactly. Jane Street will argue they were just providing liquidity, making markets, and these patterns are a byproduct of legitimate strategies. SEBI has to dismantle that argument. The SAT hearing will be fascinating from a legal and technical perspective.
So stepping back,
Yeah.
what did this whole thing mean for the broader market? We saw immediate impacts.
Right, absolutely. Brokerages like Nuvama, Angel One, even the exchanges like BSE, and depositories like CDSL, their stocks took a hit.
Why them specifically?
Fears of contagion, maybe? But also, I think, a general nervousness. If this kind of alleged manipulation can happen with a major global player, what other inefficiencies or vulnerabilities are lurking? It triggers wider scrutiny.
So it's not just about Jane Street potentially breaking rules.
Not at all. It forces a hard look at the system itself. How good is our market surveillance, really, against these super-fast algorithms? Are the circuit breakers and checks enough? This feels like it could be a critical turning point for protecting retail investors, for ensuring the whole system is resilient, and definitely for how we regulate complex derivatives markets.
And the outcome of Jane Street's appeal, that sets a precedent.
A huge precedent. For India's market oversight, absolutely. But the ripples could go wider. Global regulators watch these cases closely. It influences how similar situations might be handled elsewhere. Everyone with skin in the game is watching this one.
So, okay, this deep dive. We've covered the alleged scheme, this sort of high-tech pump and dump. We've looked at SEBI's pretty dramatic response, the widening probe, and the really significant financial stakes and market jitters. It's quite a story.
It really is a powerful reminder of that constant push and pull between financial innovation and regulatory oversight.
Yeah, leaves you thinking.
You know, it really makes you wonder, as markets get ever more complex, faster, driven by algorithms, what are the new challenges for regulators? How do they even tell the difference between legitimate sharp trading and deliberate manipulation anymore? And you have to ask, how might this specific case actually shape the future of market regulation, maybe even market design, not just in India, but globally? It's something to keep thinking about.